Yo, what's up, legends? If you opened your crypto app recently and felt that little punch in the gut, yeah, you're not alone. Bitcoin just lost a level that it had been defending for months. Altcoins are bleeding, crypto Twitter is screaming, YouTube thumbnails are full of red arrows, and suddenly everyone is saying the same thing. Is this the 2026 crypto crash? But here's what almost nobody is talking about. This exact kind of chaos has happened before, and every single time, it came right before the most explosive bull runs in crypto history. So in this video, we're not just reacting to the crash. We're going to break down what's actually happening behind the scenes, why big money is not panicking, why governments are paying attention to Bitcoin more than ever, and why this moment could be the setup for the next insane move up. Because while retail is scared, smart money is positioning. And if you stay till the end of this video, you're going to understand why some of the biggest investors in the world believe we are about to see a global arms race for Bitcoin within the next few years. Yeah, a literal race between countries to buy Bitcoin. Let's get into it. Right now, the market feels horrible. Bitcoin dropped hard, altcoins dropped even harder. People who bought near the highs are questioning their life choices, and traders are getting chopped left and right. But if you zoom out for just a second, you'll realize something crazy. This is not new. Bitcoin has done this in 2013, it did this in 2017, it did this in 2021, and now it's doing it again. A brutal shakeout, a confidence wipe, a moment where everyone starts thinking, maybe this time it's different. But what if this time it's different in a bullish way? Because while price is dropping, the fundamentals behind Bitcoin have never been stronger. Let's talk macro for a second. One of the biggest macro investors in the world, Dan Morehead from Pantera Capital, recently said something that should make every crypto investor pay attention. He said we are witnessing a massive shift in how the world thinks about money. Governments are printing money like never before, central banks are stuck, inflation is quietly eating away at the value of cash, and what used to be called stable money is now losing purchasing power year after year. He made a wild but logical point. Over your lifetime, the dollar loses around 90% of its value. That's considered normal, and people are just okay with it. So what do rational investors do in a world where paper money is constantly being debased? They move to assets with fixed supply. Gold, real estate, and now Bitcoin. But here's where it gets interesting. Gold had thousands of years to build trust. Bitcoin has had 15 years, and already Bitcoin is matching gold in ETF inflows over the last couple of years. Think about that. Digital gold is catching up to old-school gold in record time. And historically, when this happens, Bitcoin eventually massively outperforms gold. Not slightly, massively. Because Bitcoin is more divisible, more portable, easier to verify, and mathematically scarce. Gold scarcity is based on belief. Bitcoin scarcity is based on code. And according to Dan Morehead, 10 years from now, Bitcoin will have crushed gold in performance. Now here's the part nobody on mainstream news is talking about, the business cycle. There's something called the ISM index that tracks economic activity, and historically, Bitcoin has never peaked unless the ISM peaked first. Right now, the ISM has been below 50 for the longest period in over 100 years of data, which means, by historical standards, Bitcoin is nowhere near a macro top. In fact, signals that used to appear near Bitcoin bottoms are flashing again. The Bitcoin to gold ratio is at one of its lowest RSI levels ever. This has only happened near major bottoms in the past. But wait, it gets crazier. Even the US government accidentally proved Bitcoin's power recently. During a congressional hearing, the Treasury Secretary admitted that Bitcoin the government seized and simply didn't sell has increased 30 times in value. Let that sink in. They didn't buy it, they didn't trade it, they just held it, and it 30x'd.
from seized assets worth around $500 million to over $15 billion. And when asked if the government could force banks to buy Bitcoin or invest taxpayer money into it, the answer was no. But they are holding the Bitcoin they seized, which basically makes the U.S. government an involuntary long-term Bitcoin holder. Now connect this with what's happening politically. The Clarity Act, a major crypto market structure bill, has stalled in Washington, but insiders say discussions are still active behind closed doors. Senate Democrats are meeting, lawmakers are negotiating, and there's strong belief that a market structure bill could pass before the midterms. Why does this matter? Because the only group strongly resisting parts of this bill is the traditional banking industry. Crypto companies are willing to negotiate. Banks are not. And in Washington, that never lasts forever. Regulation is coming, not to kill crypto, but to define it. And when that happens, trillions of dollars that were sitting on the sidelines suddenly get legal clarity to enter. Now here's the part that sounds insane, but makes perfect sense. Dan Morehead believes that within 2 to 3 years, there will be a global arms race for Bitcoin, a race between countries. Think about this logically. If you're a country like China or Iran or any nation that is not aligned with the U.S., would you really want your national wealth stored in assets that the U.S. can freeze, sanction, or block? Or would you rather hold an asset that no one can control, freeze, or print more of? Bitcoin. Now imagine multiple regions realizing this at the same time. Imagine the US, UAE, China, and others all trying to accumulate millions of Bitcoin. There are only 21 million, and millions are already lost forever. What happens to price when countries start competing to buy it? That's the arms race he's talking about. And he says you want to be positioned before that realization hits, because once it starts, it will be too late to buy cheap Bitcoin. This is why this crash, as painful as it feels, might be the opportunity that people look back on in a few years and say, I can't believe I didn't buy more there. Right now, retail sees fear, smart money sees positioning. Retail sees a crash, macro investors see a discount on the hardest asset in human history. And if history repeats, which Bitcoin loves to do, this phase is the boredom, fear, and disbelief phase right before the next expansion. So what should you be watching? Watch regulation progress, watch ETF inflows, watch macro signals like ISM, watch what governments are doing, not what they're saying, because they're holding Bitcoin, not selling it, and that might tell you everything you need to know. If this video gave you clarity in the middle of chaos, do me a favor and hit subscribe. Most people watching these videos every day aren't subscribed, and it costs you nothing but helps this channel massively. We're here every single day, breaking this market down so you don't get shaken out by headlines and emotions, because this market rewards patience, information, and positioning. And right now, the setup is getting very interesting. The crash might not be the end. It might be the beginning of the next insane chapter in Bitcoin's story.